For nearly a century, the US dollar has ruled the world. It has been the backbone of global trade, the enforcer of American sanctions, and the ultimate symbol of US economic power. But in 2025, that power is under fire like never before. The BRICS nations, led by giants like China, India, Brazil, and Russia, are uniting to break free from the dollar's grip. They're building new payment systems, shifting trade into local currencies, and even preparing to test a shared currency that could challenge America's financial supremacy. And Washington's answer? Tariffs as high as 100%, a move that could trigger a global economic showdown. What happens next could reshape the world economy, raise costs for every American, and weaken the dollar's role as the planet's reserve currency. This is the story of how BRICS declared economic war on the US dollar, and what it means for the future of global power. Back in 1944, the US dollar emerged as the world's dominant currency. For nearly 8 decades, it has been the backbone of global trade, the driving force behind American sanctions, and the centerpiece of US economic strength. But in 2025, that dominance faces a serious challenge. President Trump has threatened sweeping 100% tariffs on some of the world's fastest-growing economies unless they halt what he describes as an attack on the dollar.
It's an attack on the dollar, and we're not going to let anybody attack the dollar.
These aren't small players. The BRICS nations, Brazil, Russia, India, China, South Africa, and others, represent about 56% of the world's population and nearly half of global GDP. 2 of those members, India and Brazil, are now facing US tariffs as high as 50% on exports worth billions of dollars each year. And in response, they're preparing to push back.
It's already bad. You don't want the situation to get any worse.
Their response is clear. They plan to match US tariffs with their own, redirect trade flows toward friendlier markets, and deepen cooperation within the bloc. By doing so, they aim not only to protect their economies, but also to reduce dependence on the United States, building a stronger and more united BRICS alliance.
During the call, the Indian Prime Minister and President Lula discussed ways to deepen their strategic partnership, including trade, technology, energy, defense, agriculture, health, and people-to-people ties.
The BRICS nations are stepping up a long-term campaign to reduce their dependence on the dollar. Their approach is threefold: increase trade in local currencies, create alternative payment systems, and explore the idea of a common currency to settle cross-border transactions. It's a direct challenge to the dollar's role at the center of global trade.
I don't need to remain subordinate to the dollar.
If BRICS succeeds, the dollar's share of global reserves, already down from over 70% 2 decades ago to around 58% today, could shrink even faster. That would mean higher borrowing costs for US consumers, weaker sanction power for Washington, and a fundamental shift in the global economy. That's why 2025 marks a turning point. BRICS has effectively declared an economic challenge to the dollar, and today we're breaking down what that means, the moves they're making now, and the impact this could have on your savings, investments, and everyday cost of living. The BRICS group is made up of some of the world's most influential emerging economies. Emerging means nations that have advanced beyond low-income, resource-dependent status, but have not yet reached the level of the US, Japan, or Germany. These economies are in transition, diversifying industries, expanding their middle classes, and becoming more integrated into global markets. Each member is on its own path. Brazil is shifting from commodities toward industry and services. Russia is resource-rich, but working to move beyond oil and gas. India is evolving from an agriculture-based economy into a hub for manufacturing and technology. China has transformed into the world's second-largest economy and the factory of the world, though its per-person income still trails developed nations. South Africa is industrialized compared to much of Africa, but continues to face inequality and unemployment. Despite these differences, their collective growth has been enormous. BRICS began with 5 members in 2009. By 2024, 4 more countries had joined, and in 2025, Indonesia became a member. 9 additional nations are waiting to enter. Together, BRICS now accounts for close to half of global GDP and more than 2/3 of the world's population, making it larger than the G7, the United States, Canada, the United Kingdom, France, Germany, Italy, and Japan. The push to challenge the dollar isn't new, but US sanctions on Russia accelerated it. Between 2021 and 2024, trade among BRICS members grew by over $700 billion. And it's not just the size of trade that matters, it's how it's conducted. more of it is no longer happening in dollars. China is the clearest example. Back in 2020, most of its cross-border transactions were settled in dollars. By 2025, that had flipped, with more than half now settled in yuan. The trend is showing up in the banking system as well. In 2024, Southeast Asia's largest lender, DBS, reported a 30% jump in yuan settlements, especially in trade linking China with Latin America and the Middle East. And this isn't just a financial shift, it's visible in the real economy. In Brazil, Ford cars have rapidly disappeared from showrooms, replaced by electric vehicles from China's BYD, now the world's largest EV maker. BYD has poured billions into Brazil, building new production lines and agreeing to local currency payment deals that bypass the dollar entirely. Every transaction in yuan instead of dollars weakens US dominance and edges borrowing costs higher at home. This is what de-dollarization looks like, and it's accelerating, especially as two major BRICS members, India and Brazil, are now facing steep US tariffs on billions of dollars worth of exports.
New tariffs from President Trump are increasing tensions with two U.S. trade partners. As of today, 50% tariffs are officially in effect for Brazil. As we just discussed, the president signed an executive order also increasing tariffs on India by 25%.
Factories are slowing down, orders are being canceled, and millions of jobs are suddenly at risk. That's why these countries are determined to fight back. Take India, for example. Once seen as one of Washington's closest partners within BRICS, it has now signaled a major shift. In response to new U.S. tariffs, India announced it will not be purchasing American-made weapons, a symbolic move that underscores just how quickly alliances can change when economic pressure builds.
The U.S. now has a new problem in Asia. India has announced that they will not be buying American-made weapons following a 50% tax on their goods.
Both India and Brazil are now openly talking about retaliation. Their response goes far beyond simply refusing to buy U.S. products or matching tariffs dollar for dollar. Instead, they're pushing for deeper integration within BRICS itself. That means shifting critical supply chains toward fellow member nations, forging new trade partnerships that bypass Washington, and expanding the use of local currencies instead of the dollar. By doing this, they're not just answering U.S. tariffs. They're laying the groundwork for a parallel system that weakens America's leverage in global trade.
I'm not going to give up on the idea that we need to work towards building an alternative currency so that we can trade with other countries. I don't need to remain subordinate to the dollar.
That shift is accelerating. Talks are underway to create new payment networks that bypass SWIFT, to price oil in currencies like the Chinese yuan, and even to test a shared BRICS currency. None of this will happen overnight, but it signals how serious the bloc has become about reducing the dollar's dominance, a dominance that has already dropped from over 70% of global reserves 2 decades ago to about 58% today. Instead of weakening BRICS, U.S. tariffs are producing the opposite effect. They're bringing these countries closer together. Brazil has already filed a formal complaint at the WTO and announced retaliatory tariffs of its own. Meanwhile, leaders who rarely agree, such as India's Prime Minister Modi and China's President Xi Jinping, are finding common ground in rebuilding economic ties. At the recent BRICS summit in Rio, Brazil's President Lula even called on members to begin testing a new shared currency, a direct challenge to the dollar. For the United States, the potential impact is significant. Economists estimate that a 10% tariff on all BRICS imports, combined with targeted tariffs of up to 50% on India and Brazil, could raise costs for American businesses and consumers by as much as $56 billion per year. That would mean higher prices on everything from electronics and cars to everyday household goods. On the export side, the stakes are just as high. BRICS markets account for billions of dollars in U.S. sales, from aircraft and agricultural goods to advanced technology. Losing access to those buyers would hit American companies hard and ripple into their share prices. And the threat doesn't stop there. BRICS nations also control vital commodities, rare earth minerals, oil, and agricultural staples. Any restrictions on those exports could strike directly at U.S. manufacturing, energy, and defense industries. The deeper danger lies in the long term. If BRICS continues expanding trade in yuan, rupees, rubles, or even a shared currency, demand for U.S. dollars will decline. Fewer dollars used globally means fewer buyers of U.S. Treasury bonds. With foreign holdings of treasuries already down to about 30% of U.S. debt, a further drop would push interest rates higher. making it more expensive to finance deficits and more costly for American households to borrow. To attract investors, Washington would need to offer higher returns, which would affect everything from mortgages to business loans. At the same time, the dollar's declining role weakens one of Washington's most powerful geopolitical weapons, sanctions. The less the world needs dollars for trade, the less effective those sanctions become. Markets are already sensing this shift. Bond yields in 2025 have been volatile, while traditional safe havens like gold and newer ones like Bitcoin have surged whenever headlines about a BRICS currency make waves. Other emerging economies are watching closely, weighing whether to stay aligned with the US dollar system or to lean toward the growing BRICS alternative. This is part of a decades-long story, one that is still unfolding. For Americans, the dollar's global dominance has meant cheaper imports, lower borrowing costs, and greater purchasing power abroad. It has helped limit inflation at home and built enormous wealth for investors. But if that advantage erodes, it will reshape how the U.S. economy functions. That doesn't mean the dollar will collapse. It remains the strongest currency in the world, and change will be gradual. But the direction is clear. The financial order is shifting. For investors, it means paying close attention to assets that hold value over time, watching bond yields carefully, and diversifying in order to adapt to whatever comes next. The BRICS challenge to the dollar isn't just an economic headline. It's a reminder that the balance of global power is changing, and how the U.S. responds could determine the future shape of the world economy.